Hello everyone, my name is Michael Robillard and this is another video from the Evolving Trader. And we are up to part 6 of a basic and effective technical analysis setup. And folks, let me tell you, I'm excited. I'm excited to share this video with you. I believe that what I'm going to share with you here is probably going to be the best part of this entire whole video series. I'm excited to share it with you. I hope you will be excited at the end of this video. Before we get started, definitely please make sure that you hit the like button. Definitely subscribe and hit that alerts button because you don't want to miss not one video that we are going to produce. Our goal is to teach you how to fish in the stock market. Teach you how to fish and be proficient and effective traders in the stock market so that your personal financial situation can improve. That is the whole purpose to the Evolving Trader. So let's go ahead and get the disclaimers out the way. Once again, this is for educational purposes. I am not telling you to trade any stocks in this video series. Anything that you see is purely for educational purposes. And as always, please make sure that you evaluate your risks. Evaluate how much money you can afford to risk in the stock market, because the stock market does involve risks. All right, folks, I am so excited about today's video. Today we are going to be talking about Hull moving averages. And what we're going to do is we are going to take 3 different moving averages and we are going to use them as one solid indicator. The first average that we're going to look at is the 20 Hull moving average. Next we're going to look at a faster average, which is a 10 Hull moving average. So the 20 is going to be our slow moving average. The 10 is going to be our fast moving average. And you will see how these two work in conjunction with one another. And once we have these two set up, we are going to glue them all together with a cloud moving average. All right. So let's go ahead and go to our charts here. What are we looking at here? We are looking at PayPal. Right, so let's go back to the beginning here. PayPal daily chart. Each of these represents a day in within, let me see, what is this? 3-year, 1-day chart. So within 3 years period, within a 3-year period, each of these are representing a day within 3 years, right? So last time we went over the TTM scalper alert. As you can see, the TTM scalper alert are these little arrows here. As you remember, these arrows are not real time. This arrow here did not appear until this candle appeared, and that gave this candle the ability to come right here as an indicator. And as you can see, it goes up, and then this candle up here most likely appeared here, or at the end of the form of this candle, because this is definitely a inverse hammer, which if you've been following this series, you know that an inverse hammer means that the trend is about to reverse, right? But most likely, because this is a TTM scalper alert, it showed up after this candle appeared, right? So now what we're going to do is we are going to add 2 Hull moving averages to our little setup that we got here. So in order to do that, let's go ahead and go to our Edit Studies button. And here we're just going to type in Hull. Bam, and as you can see, it's already set up 20 Hull moving average. Gonna hit apply. Take a look here. I'm going to do a little bit of editing just so it'll be clearer. Actually, you know what? Nah, forget that. Let's just do it as it is right here. So as you can see, there's two colors. Looks like it's set up as purple going down, light blue going up. Basically what these two colors represent is where the trend is at right now as we're looking at the stock. So as we can see here, this is a downward trend, and now we're seeing an upward trend. So here it's going bearish, and right here is when it starts going bullish, right? Now if you notice, it kind of follows what we already have down here at the bottom, right? It follows this average right here, which is another moving average, right? So we can see it pretty much follows along right here, and let us move forward just to get an idea. So as you can see here, still going down. Now look at this candle here. It's telling you that it's going bullish now. This candle is the indicator of the bullish. Unlike the TTM scalper alert, this is showing you the change in real time. And as you can see, in conjunction with what we have down at the bottom here with our MACD, it is moving right along with it. So as you can see, if you can follow the line, if that's all you do is just follow this line, you will make money. Now, of course, like I've been saying throughout this whole series, nothing is 100%. Right? So let's see how long this trend goes. Here we go. So let's say you jump into this candlestick here at the highest point. Worst case scenario. You come in right here. Look at this. Yeah, you're gonna experience some downs. It's gonna go up. But look at this. You're making profit. You're making profit. After this, you're making profit. Making profit. And then you jump out as soon as this candle appears, or even this one, right? You jump out, you're making money. If you came in here, how much is this? This is $77.22. And you jump out right here, $80 at the very bottom here, which is $80 and about 50 cents. You just made profit. And all you did was nothing but follow a simple line. All right? Now that right there in and of itself, I should shut down this video and we all go home. Enjoy the rest of your day. But we're about to make this a little bit better. So let us go back into our edit studies button. And what we're gonna do is we're gonna pull in another Hull moving average. So now we got two 20s here, as you can see. But what I'm going to do is I am going to edit this one here, and I'm going to change it from a 20 to a 10, right? And we will still keep this. Actually, you know what? I want to make this a little bit more visually appealing. So down, red, up, green. Okay. And what I'm going to do, I'm going to come into 20 here. Down, red, up, green. And what I'm going to do is I'm going to change the width. So that way we can distinguish between our 10 and our 20 Hull moving average. All right. Now you don't have to do it exactly how I do it. You can set it up however you want. But you know, I just want to show you so you can see. Bam. Now we're cooking with some Crisco. Now check this out. Let's go back to the beginning here. So here is our 10, which is our faster one, right? Now here's how you play these two moving averages. Very simple. Let the 10 be your initial alert, right? Letting you know, okay, the stock is about to change directions. Same thing, right? Both of them are telling you when the stock is bullish, when the stock is bearish. However, the 10 is letting you know it's about to go bullish right here. Right? So now here is how you can play this. Here's how you use this. And this is how I was taught to use these 2 Hull moving averages. When I see that the 10 changes, then I know, okay, maybe it's time for me to go in, jump in here. However, being the conservative trader that I am, I might want some confirmation. So I'll wait. Now both of them are green. And this is my indication. And take a look. If I waited for the confirmation of the 20 and I jumped in here, right? Money. Straight money. Let's say I came in, what, $72.20? This is money. Money. Look at this. This candlestick has already reached where I came in. Money came out right here. Money. And now, this is where this candle changes. So I have a couple of options here. I can say, okay, the stock has changed, and I could use my 10 to say, okay, it's time for me to jump ship. Right? I could do that, or I could say, let me wait for the 20 to give me confirmation, because as you can see, it's still green. Right? Keep in mind, the 20 is a slower one, so it's looking at a longer time span than the 10 is. That is the difference between the two. They're still moving averages, but the 10 is looking at a shorter time span, while the 20 is looking at a longer time span, which is why you see the difference here, right? But let's say I jump ship out of here, coming in at this point, leaving at this point. I did not lose any money. Didn't lose any money. Isn't that amazing? Let's continue looking at this. Now, there are times when both of them will change together, as you can see up at the top here, right? Definite indicator, right? So let's follow along on this chart. All right, still both going down. Oh, look at this. The 10 is saying, oh, it's about to switch. It's about to switch. Now, once again, you have an option here. You can say, okay, let me go ahead and jump in. Or you can say, let me wait and see what the 20 does as a confirmation of if I should jump in. Let's see what happens here. Now, both of them hit the green at this candlestick. Boom. Making money. Now, here's the beauty of it. Now, remember, we looked at the 20 before, right? Just the 20. And we talked about this actual area right here. Right? And we said that, yeah, you wouldn't make that much money, but you'd still make a little bit of money, right? So here, notice that it turned red right here. Right? Say you jumped into this candlestick here. You still probably would have ended up losing money if you didn't catch this very top part, right? But the green is saying it's still heading up. So this is where you have to make decisions. You can use this as this is a tool that gives you more information, folks, to know when is a good time to get into a stock and when is a good time to jump out of a stock. This is a no-brainer right here. A no-brainer. Just using these 2 Hull moving averages. Now let's keep moving along on this PayPal stock. Right? Moving one day at a time. Look at how it works. Look at that. Let's say you came in over here when the 10 said that this is going on a short little bullish, right? Look at that. You just made so much money. And then you jump ship on this candlestick. You just made a whole lot of money. Even still. What is this? What's the top of this here? We're looking at what? $79.53. What is the bottom of this one here? $81.34. You just made profit just following the 10 and the 20. And then of course, now most of the time it's gonna follow pretty close together, right? And here's something else that you also want to notice. The 10 Hull moving average moves very closely with the TTM scalper alert. Look at that. Here's an example. Here's a TTM scalper saying it's going down. The very next candle, it says it's going down. Here is where they're both saying that it's changing to go up. Right here. So you see how using these indicators in conjunction with each other, right? Here's the TTM scalpel. I mean, well, obviously this one wouldn't appear until here or here, right? But still, it's letting you know in real time. Let's keep moving forward here. And now you got the TTM scalper here saying, oh, it's about to go down. Right around here. And this is most likely the candle that gave this arrow right here. So look at that. See, so it's pretty much hand in hand with the TTM scalper. So this is just another indicator to confirm whether or not you are making the right decision or not going into a stock. And then we're gonna move again. Look at that. Once again, TTM scalper alert most likely came from this or this candle, and look at what happens. Moving up, moving up. Easy money. Easy money making. Easy money making. Right here. All you have to do is just look at the indicators. They're telling you when to go in. They're telling you when to come out. Isn't that beautiful? Isn't that beautiful? And we can keep going. Let me see here. This is Microsoft. Look at that. Look at that. It goes down, and then here it tells you it is going down. Here is your confirmation that it is going down. Look at that. Look at how they all work together. And then on top of that, let's look down here. Look at this. They all work together. You no longer have to guess, folks. Let the system tell you. Let the system give you the answers that you're looking for. But now let's go ahead and make this just a little bit more sweet. Right? Let's just make it a little bit more sweet. So we're going to go back to our edit studies. And this time we're going to pull something that you're not going to find anywhere else. This is I labeled it here. This is actually a script that was given to me by a man who's been trading for over 25 years. He said that he got this script about 15 years ago. At the time, his securities account was around $15,000 when he got this indicator. Years have gone by. Now his securities account is 8 figures. Yes, that's right, 8 figures. What does that mean? $10 million or above is what his securities account is. And he said that he has just come to rely on just this one indicator alone, right? I labeled it the ZZZ HMA Cloud. HMA stands for Hull Moving Average. And if you want this script and you're using Thinkorswim, or even if you're not using Thinkorswim, if you're using any desktop platform that accepts scripts, I'll give you the script. That's not a problem. Just let me know, and I will send you the script via email. My email is theevolvingtrader@gmail.com. Shoot me an email saying, hey, I would like that HMA Cloud script, and I will send it to you. No problem. So here we already selected it, right? Now here's what I'm going to do. We do need to modify it because, as you can see, this cloud is a little bit longer than our 10 and 20. It's at a 50 and 100 Hull moving average. So what I want to do is edit. I'm going to change this. Oh, there we go. 10. Change that 100 to 20. Hit OK. Hit apply. Bam. This takes the guesswork all out of it, folks. And this is it. This is the basic and effective technical analysis setup right here. You have the MACD, you have the RSI, you have the TTM scalper alert, you have the 10-20 Hull moving average with a cloud. There is no, look at this. There is no other information you need. What other information would you need? Look at this. When the cloud is green, jump in and look what happens. When the cloud is red, jump out. Look what happens. Green, jump in. Oh man, this is just beautiful. This is how I have been making money for the past I would say 9 months. I didn't I had the Hull moving averages for over 2 years now. The cloud just made it a little bit nicer. The cloud just made it nicer because you can just follow the cloud and know when it's time to jump ship, know when to come in, know when to jump ship. This basic and effective technical analysis setup is simple. Once again, folks, can you follow the colors? Can you follow the colors? It's just that simple. It is just that simple. Look at this. And this is exactly what the cloud would look like on these days. This is exactly what the cloud would look like on these days. And folks, once again, look at this. Look at this little cloud right here. This is the only downfall, because you never know, right? You never know what the stock is gonna do. I try, like I said, I think in part 1, I don't try to predict the market, because you never know what's gonna happen. So as you can see here, let's say you came in on this candlestick here, right? That you saw the green, you jumped in on this candlestick. You really wouldn't have made much money. You still could make money if you were quick enough to jump out here. Not a whole lot. Sometimes you might even break even, or if you do lose, you'll lose very little, right? So just following this system this basic and effective technical analysis setup, it prevents you from breaking your securities account. You're not always going to win. As you can see, this is an example here where you could have lost. Depending on where you came out, you could have lost. Or you could have broken even. Say if you came in here and then came out here, you would have lost. Right? But you wouldn't have lost a lot. And that is part of being a successful trader, is risk management. So just following this, if you go into a position in the wrong time, just following this, you can still save face and not lose a whole lot of money. Let's keep going here. But most of the time, you're making money. Most of the time, you are making money. Look at that. Making money tells you exactly when to jump ship. Alright folks, I am going to do one more video to wrap up this series. And what we're going to cover in this next video is going to be strategy. How to implement the basic and effective technical analysis that I have just shown you in these last 6 videos. Right? How to apply them in real time, in actual trades. So you're gonna actually see me go into a position using this paper trading account here. You can see simulated trading, and come out of a position hopefully. Okay, so I hope you're excited. I hope you're excited. I know I was excited when I learned of this setup. Well, really, I kind of built it little by little. Like I said, I've spent money going to seminars, bought tons of books. All of this came by being hungry for knowing how to succeed in the stock market. This is how all of this came to me. And now I am sharing it with you because I want to see you succeed as I am succeeding in the stock market. I think I'm gonna wrap it up here. Let your mind marinate on the knowledge that I just dropped on you in these last 6 series. Now, if you haven't watched the other videos before this, definitely go back, take a look. If you see value in what I'm sharing, please share it with other people that you know that are interested in the stock market. I am pouring my heart out here so that you can succeed in the stock market. And I'm not asking you for anything other than to pay it forward. That's it. Once again, folks, my name is Michael Robillard. This is the Evolving Trader, and we have just concluded part 6. Next video is going to conclude this whole series, and then we'll see what happens after that. Hope you guys have a great day.